Glossary term abandoned asset, non-current asset that are to be used to the end of their useful lives, and assets that are intended to be closed rather than sold. Account a record that shows the increases and decreases of an asset, a liability, or equity, which include income and expenses. Accounting the systematic process of recording, summarizing, and presenting financial information to users. Accounting cycle. The process of compiling and recording data for all the transaction and select economic events that take place during an entity operating period. Accounting equation, an equation that show that the total of all the company asset equal the sum of the company liability and owner's equity. Accounting error, an omission or misstatement, even though the correct information was available at the time the error was made, that is, a transaction that was recorded incorrectly. Accounting Information System, AIS, a system that is responsible for recording and processing financial transactions and for reporting their effect on the financial position of the company. Accounting software designed to provide accurate and timely information to users for decision making purposes. This involves producing financial statements and accounting reports, such as payroll, account receivable, and account payable, and printing checks for payment of account payable and other items. Accounting Standard for Private Enterprises, ASPE, a set of standards developed by the Accounting Standard Board, ACSB, that is used by most private entities for financial reporting. Accounting system, the system used to manage the income, expenses, and other financial activities of a business. Account payable, AP, days outstanding, a measures of the average number of days it takes a company to pay its suppliers. A higher number of days could be indicative of difficulty making payment. Account payable, AP turnover, a measure of how quickly account payable are paid, that is, how many times on average payables are paid during the year. In general, the higher the account payable turnover rate, the more quickly payments are made. Account receivables, a receivable that arises out of a credit sale transaction from the normal course of business and is typically short term and unsecured. Account receivables are also known as trade account receivables or trade receivables. Account receivables, AR turnover, a ratio that measures how quickly account receivables are collected. Accrual, an accounting entry that reflects event or transaction in the period in which they occur, even if the cash receipt and payment occur in different periods. Accrual-based accounting. Under this accounting system, events are recording when they occur rather than when the cash flow is affected. Accrued expense. An expense that has been incurred but has not yet been paid or recorded at the period end, also known as accrued liabilities. Accrued revenue, revenue that has been earned but not yet invoiced or paid. Acquiree, the entity that has been purchased slash controlled. Acquirer, the entity that obtained control over the other entity, acquiree. Acquisition date, the date that the parent obtained control of the subsidiary. Acquisition differential, the difference between the purchase price and the entity's proportionate share of the value of the book value of the associate on the date of purchase. Acquisition method. The fair market value of the acquired company is allocated between the net tangible and intangible asset portion of the statement of financial position of the buyer. Any resulting difference is regarded as goodwill. Acquisition related costs. The costs incurred to facilitate the acquisition, such as advisory, legal, and accounting fees. These costs are expensed in the period in which the costs were incurred and are not included as part of the consideration transferred in a business combination. Actual actual real gains and losses. Changes in the defined benefit obligation resulting from experience adjustment and the effect of changes in actuarial assumption. Actuary report of pension obligation. A report provided by the plan actuary that provide a reconciliation of the change in value of the pension plan obligation for the period. Adjust market assessment approach, a method of estimating the standalone selling price of a good or services where the seller evaluate market condition and estimate the price that customer in that market would be willing to pay for the good or services. Adjusted trial balance. A trial balance prepared after the adjusting journal entries have been recorded and posted. Adjusting events. Events after the reporting period that provide evidence of condition that existed at the end of the reporting period. Adjusting journal entries. Journal entries that are needed to accrue transaction in the general journal at period end. Agency relationship. A fiduciary relationship where a principal allow an agent to act on their behalf. Aging of account methods. A method used to determine a loss allowance that is calculated as a percentage of each account receivable outstanding at year end. This is also known as the balance sheet approach. Agricultural produce, a product obtained from living things. Allowance for doubtful account, a balance sheet contra account that reduce account receivable AR balances to their current present value of future expected cash inflows. Amortization or depreciation, a process of expensing long-lived asset, also known as amortization. Amortized cost, the cost of an instrument plus or minus adjustment for any purchase, discount, or premium associated with the purchase of the investment. Amortized cost, note receivable, the initial fair value plus cumulative adjustment for interest minus payment made and any reduction of for impairment. Anti-dilutive securities, securities that could result in an increase in earnings per share or a reduction in loss per share resulting from the assumption that convertible instruments are converted, that option or warrant are exercised, or that ordinary share are issued upon the satisfaction of specified condition. Area of interest method, a method of capitalizing exploration and evaluating expenditure where all exploration and evaluation costs relating to an area of interest, which is an individual geological area that is favorable environment for mineral deposit, are capitalized. Arrears. Dividends on cumulative preferred share that should be paid to preferred shareholder in a particular year, but have not yet been declared. Article of Incorporation, a legal document submitted to the provincial or federal government which establishes a business within Canada. Artificial intelligence, a task performed by a computer that mimics human intelligence. Asset, a present economic resource controlled by an entity as a result of past event and that has the potential to produce economic benefits. Asset ceiling, the present value of the amount by which future contribution to the pension plan can be reduced, plus the amount of the surplus, if any, that a company can withdraw from the plan. Asset life, the estimated length of time that the asset will last. Asset management ratio that provide information about how fast cash is flowing into and out of the organization and how efficiently the company is managing its asset resources. Asset retirement obligation, the cost of dismantling and removing PP&I and resorting and restoring the site on which it is located. Asset turnover, a ratio that indicates how efficiently assets are utilized to generate sales. Associate, an entity over which an investor has significant influence. Authorization, the process of giving someone permission to do or have something. Authorized for issue, the date on which the board of directors approved the financial statements, also known as authorization date. Authorized share capital determines the classes of share the corporation may issue and the maximum amount of each class of share that can be issued. Available for use, the asset that is ready to be used for its intended purposes by the business. Average accounts receivable AR collection period, a measure of effectiveness of the business in collecting its account receivable. It calculates an approximation of the number of days that credit customers are taking to pay their accounts. The average condition period is also known as account receivable as the account receivable days outstanding. Average exchange rate, the exchange rate used for transactions that occur evenly in a given period. For example, sales over the year when the exchange rate does not fluctuate significantly during the period in question. Bad debt, an account receivable that cannot be recovered. Balance sheet, a statement that presents asset, liabilities, and equity account as at a specific date, also known as the statement of financial position. Bad indebtedness, a bank overdraft or a line of credit balance. Bank loan, debt borrowed from the bank, typically requiring the borrower to pay interest on the outstanding balance of the loan and to make the principal payment as outlined in the loan agreement. Bank overdraft, an extension of credit from a lending institution when a bank account reaches a zero balance. Bank reconciliation, an internal control process that compares transactions in the company records with transactions in the bank statement to ensure that the records are accurate and complete. Bankruptcy, the state of being unable to pay bills when they are due. Bargain purchase occurs when the price paid to acquire an interest in another company is below the fair market value, below the fair value of the investor share of the investee's identifiable net asset at acquisition date. Bargain purchase option, BPO, an option that exists at the end of a lease to purchase the asset from the lessor at a bargain price sufficiently lower than fair value at the end of the lease. Basic earning per share, basic EPS, earning on a per share basis for common share that were outstanding during the year. Bear plant, living plants that are used in the production or supply of agricultural produce are expected to produce for more than one period and have a remote likelihood for them of themselves being sold as agricultural produce except expect as incidental scrap sale. Benchmark price. For share appreciation right, this is the price to which the market price of the underlying share is compared to determining to determine the amount of the award. Benchmarking involves comparing an entity financial result against industry leaders, main competitors, and or industry average. Big data, data that is so voluminous that traditional processing software is not capable of processing it. Bill and hold arrangement, an arrangement where an entity bill a customer for product, but the entity retain physical possession of the product until it is transferred to the customer at a point in time in the future. Biological asset, a living thing that is a living thing and is a consumable biological asset, a plant or tree that is harvested as the end product, or an animal that will provide a product. Blockchain, a distributed, decentralized public ledger that is considered secure because blocks can be viewed by anyone and changing a block changes its hash. The blocks are digital pieces of information such as a transaction date, time, and dollar amount can be linked to individuals by a digital signature. Bond represent a promise to pay, represent a promise to repay a specified amount of money in the future and pay periodic interest at a specified interest rate and can be short or long term. Bonus method for the withdrawal of a partner. A method of withdrawing a partner from a partnership where the difference between the withdrawing partner payout and their capital balance is calculated and either added to or deducted from the remaining partner's capital accounts. Bonus method of admitting a new partner. A method of admitting a new partner to a partnership where excess or deficit between the new partner capital contribution and their percentage ownership of the net asset of the partnership is recorded as a bonus to either either the existing partner or the new partner. The capital account of the existing partner are adjusted for the excess or deficit capital contribution on the admission of a new partner. Bookkeeping, the recording of economic event for a business. Borrowing cost, interest, and other costs incurred as a result of borrowing funds. Bundled sale, a sale contract that contains multiple deliverables. Business combination, any event where one entity obtains control of another entity through the purchase of net asset or share of another entity. Call option, an option that gives the holder the right to buy a specified instrument, such as common share at a specific price and at a specific time. Canadian Pension Plan, CPP, a mandatory federal plan that provides disability, retirement, and death benefit to Canadians that qualify. Canadian Accounting Standard Board, ACSB, an independent body that has the authority to establish accounting standards for all Canadian entities outside the public sector. Canadian Securities Administrator, CSA, an organization whose aim is to provide a harmonized and unified approach to securities regulation across Canada. Capital, financial resources to operate and grow a business. Capital Asset Fund. This fund includes all items that are related to capital asset, such as property, plant, and equipment, amortization expense, and so on. This is also referred to as the capital fund. Capital contribution, an investment by an owner in a business. Capital cost allowance, the tax deduction for depreciable property such as furniture, equipment, computers, or even buildings that depreciate over time. Capital deficiency occur when a partner capital account has a debit balance rather than a credit balance. Capital lease, ASPE, a lease that, from the point of view of the lessee, transfers substantially all the benefits and risk incidentals to ownership of property to the lessee. Capital losses, losses for tax purposes, which are directly related to buying and selling capital items, such as a building. Carrying amount, the book value of the transferred item recorded by the transferor. Cost less accumulated depreciation. Carrying amount is also known as carrying value or net book value or book value. Carrying value, the value of an asset or liability in the organization financial records, also known as book value. Carrying value, in bracket book value, the value at which an asset is recorded on the statement of financial position. Cash, cash on hand and demand deposits. Cash debt coverage, a ratio that measures the company's ability to repay its total liability in a year from the operation of the same period. Cash deficit, a negative cash balance. Cash dividend, a distribution of monies to the shareholders of the company, typically paid out of the company earnings or accumulated profits. Cash equivalent, short term, highly liquid investments that are readily convertible to a known amount of cash and which are subject to significant risk of change in value, held for the purpose of meeting short-term cash commitment rather than for investment or other purposes. Cash flow hedge, a hedge of exposure to variability of cash flow of financial instruments or highly probable forecast transaction that could affect profit or loss. The value of the hedger item has uncertainty. Cash flow statement, a statement that presents a reconciliation of cash at the beginning of the period which cash at the end of the period. Cash-based accounting. Under this accounting system, revenues are recorded when collected and expenses are recorded when paid. Cash generating unit. The smallest identifiable group of assets that generate independent cash inflow that can be tracked. Change in accounting policy typically involve management changing from one acceptable manner of accounting to a particular item to another acceptable way of accounting for the same item. Change in estimate, a result of new information that was not available at the statement of financial position date. Chart of account, a list of all the account and account numbers used by a business. Check, a negotiable instrument that order a bank to pay a particular amount of money from one account to another account in whose name the check has been written. Chief Operating Decision Maker, CODM, the individual or group of individual responsible for strategic decision making regarding the entity. Class of asset comprises asset of a particular nature such as land, building, machinery, and automobiles. Closing entries, entries made at the end of the accounting period to transfer the revenue, expense, and drawings dividend account balances to owner's capital slash retained earnings. Closing date, closing rate, the spot exchange rate at the end of the reporting period. Commencement date, the date that the right of use asset is first available to the lessee. Commercial substance non-monetary transactions exist when either configuration of the future cash flow of the asset received differs from those of asset given up, or when the entity specific value of the asset received differs significantly from the entity specific value of asset given up. Commercial substance revenue, when the risk, timing, or amount of the entity future cash flow is expected to change as a result of the contract. Commodities, basic good used in commerce that are interchangeable with other good of the same type. Commodity risk, a risk that fluctuation in the prices of commodities such as grain or metals may cause uncertainty in fair values of future cash flows. Common share, shares that entitle the holder to one voting right in the event of a shareholder vote. Comparability, the ability to compare one set of financial statement with another. Comparative statement of financial position. Comparative statement of financial position. A statement of financial position that shows the balance at the beginning of and end of the period for asset liabilities and equity. Completed contract method. A method that involves recognizing revenue at the completion of the contract. Completeness. All the information that is necessary to show the economic reality of a transaction provided. Completion date, the date the financial statement are complete, that is the date that a complete set of financial statements including note disclosure has been prepared, all final adjusting entries have been reflected in the financial statements, there are no changes to the financial statement plan or expected, and the financial statements have been approved in accordance with the entity process to finalize its financial statements. Complex financial instrument. A financial instrument that is structured in a way that requires additional analysis of its nature. Prima, primarily, prim, primarily, because it contains more than one financial component, such as both debt, debt and equity attributes. Component of an entity comprises operation and cash flow that can be clearly distinguished operationally or financial reporting and for financial reporting purposes from the rest of the entity. Compound financial instrument, a financial instrument that includes at least two elements, one or more of which is a convertible security. Comprehensive income include profit or loss and other comprehensive income, OCI. Condensed financial statements, statements that include less than complete financial statements and select explanatory note. Configuration of the future cash flow. Reflect a change in the risk, timing, or amount of future cash flows. Conservatism. The selection of the alternative that is least likely to overstate asset and or income. Co-sign consignment arrangement, an arrangement in which an entity, the consigner deliver a product to a second party, the consignee to sell. However, the second party has not obtained control of the product and does not hold the legal title. Consolidated financial statements. The parent and subsidiary financial statements reported as one entity with adjustment as necessary to eliminate intercompany transactions. Consolidation method. A method of recording an investment in which the investment is reported as if it is were part of the investor. Asset, liabilities, revenue, and expenses of the investee subsidiary are shown within the same line item as the investor parent. Constructive obligation, an obligation that arises from an established pattern of past practices or policies rather than from a legal agreement or contract. Contingent asset, a possible asset that arises from past event and whose existence will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events not whole, wholly within the control of the entity. Contingent consideration. Consideration include as part of the purchase agreement that is contingent on one or more future events. For example, profitability of the acquired company. Contingent contingent gain, ASPE, a possible asset that arises from past event or whose existence will be confirmed only by the occurrence of non-occurrence by the occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the entity. This is referred to as contingent asset under IFRS. Contingent liability or IFRS, a liability that does not meet the recognition criteria. Contingent loss, ASPE, a liability of uncertain amount or uncertain timing. This is referred to as provision under IFRS. Contingent transaction, a transaction that is dependent on another event to exist. Contingently issuable shares, shares that may be issuable based on future performance or future event. Continuing operation, an organization or non-component or a component of an organization that is expected to continue operating in the future. Contra account, an account that has the opposite normal balance to its related account. Contract, an agreement between two or more parties that create enforceable right and obligation. Contract modification, a change in the scope and or price of a contract that is approved by the parties that to that contract. Contributed capital, the amount invested or contributed in a corporation by its owner in exchange for shares of ownership. Contributed surplus, the portion of equity that is not shared capital or retained earnings. Contributions, non-reciprocal transfer or donation to an NPO or cash or another asset or non-reciprocal settlement of liability. Control occur when an investor can direct the financial and operating policy decision of an investee without help of other. Control activities, policies and procedures that help ensure that management directives are carried out. Control environment, set the tone of an entity that and reflect the overall attitude, awareness, and response of management and those charged with governance. Control of an asset refer to the ability to direct the use of and obtain substantially all the remaining benefit from the asset. Convertible, a feature that allow preferred share to be converted into a specified number of common share. Convertible bond, a bond that allowed the investor to exchange the bond for common share of the entity at a stated rate. Convertible debt, an attribute of debt, but the holder is also allowed to exchange the debt for a number of common share, usually a predetermined number during a specific time frame without the need to pay additional cash. Convertible preferred share that have the option to be converted into common share. Convertible securities, financial instruments that enable their holder to exchange one type of financial instrument to another, usually common share. Corporation, a business that is organized as a separate legal entity. Correcting journal entry, adjustment of accounting transaction only when an error occur. Cost of accounting, the recording and tracking of cost used in the manufacturing of in the cost accounting, the recording and tracking cost, the recording tracking of cost used in the manufacturing process. Constraint, a pervasive constraint that ensures that the value of information provided is greater than the cost of providing it. Cost method, a method of recording an investment of another entity that involves recording the investment at cost, and dividends from the investment are recorded in the books as investment slash dividend income only when received or receivable. That is, the dividend is declared. Cost model, assets are recorded at historical cost and depreciation is taken each year, with the asset being reported at its original cost less accumulated depreciation and any accumulated impairment loss. Cost of disposal, the cost to sell an asset or cash generating unit. Cost of disposal do not include either finance cost or income tax expense. Cost of good available for sale, the cost of good on hand at the beginning of the period plus cost of good purchased during the period. Cost of goods sold, the cost of merchandise sold during the period. Cost plus contract, a contract that required the customer to reimburse the entity for all expenses plus an agreed upon fee for completing the contract. Cost of conversion, cost incurred to transform raw material into the finished goods. Coupon date, the date of the interest payment of a bond. Coupon rate, the interest rate that determines the amount of interest that the bond issuer paid to the investor. The coupon rate is also known as the stated rate or the contractual interest rate. Credit, the right side of an account. Cryptocurrency, a type of digital or virtual currency that uses cryptography for security measure. Cryptocurrency exists only in electronic form. Cumulative dividend, dividends that accumulate if not paid in a given year, so that any prior unpaid dividends to preferred shareholders are paid before common shareholders receive dividends. Cumulative preferred share, a share that requires all previously missed dividend payments together with the current entitlement to be paid before any monies can be distributed to the common shareholders by ways of dividend. Cumulative translation adjustment, a separate component of shareholders' equity used under ASPE for reporting the cumulative foreign exchange gain and losses arising from the translation of a self-sustaining foreign operation. Current asset, cash or other asset that will either be converted to cash, used up, or sold within 1 year or one operating cycle of the statement of financial disposition SFP date. Current income tax, the amount a company needs to remit to authorities with respect to taxes for the year. Current liabilities, an obligation that is due or expected to be settled within 1 year or one operating cycle from the statement of financial disposition SFP date. Current rate method, ASPE, a method of translation that translates asset liabilities, revenues, and expenses in a manner that retain their basis of measurement in terms of the foreign currency. That is, it uses the foreign currency as the unit of measure. Current ratio, a ratio that measures liquidity by comparing the proportion of current assets to current liabilities. It determines whether short-term assets are sufficient to cover long-term liability. The current ratio is also known as the working capital ratio. Current service cost, the actuarial present value of future benefit earned by the employee for providing service in the current year, net of any contribution made by the employee. Current tax payable. Tax liability for the current year based on the Income Tax Act. Customer option for additional goods and services. Programs that award points to a customer can later redeem for something of value. Dashboard, an interface that provides a high-level overview of information required by decision makers. Data, information processed by computer software. Date of record, the date on which the company determines which shareholder will receive the dividend. The dividend, that is, only shareholders that own shares as of the date of record will receive the dividend. Debit, the left side of an account. Debit and credit system, a system of accounting in which accounting transactions are recorded using at least one debit and one credit. Debt covenant, a condition imposed by a lender with restriction that must be met by the borrower. Debt instrument, a fixed income asset that provides the lender with a fixed rate of interest, along with the return of the principal amount invested. Debt ratio, a ratio that compares the total liability to total assets. It is a measure of how much of the total asset of the company are financed through debt. Debt to equity, a ratio that compares the total liability to total equity. It is a measure of how much suppliers, lenders, and other creditors have committed to the organization versus what owners have committed. Declining balance method, a method of depreciation that assumes that the benefit derived from the asset is higher in its initial years and less as the asset ages. Decommissioning involves dismantling and removing a tangible asset and restoring the site on which it is located. Decommissioning cost, the initial estimate of the cost of dismantling and removing a tangible asset and restoring the site on which it is located, recognized as an asset. Decommissioning provision. A present obligation for unexpected future cost to decommission a tangible asset. A decommissioning provision is known as asset retirement obligation under ASPE. Deductible temporary difference. A difference that results in less income tax to be paid in future when the difference reverses or is eliminated. Defeasing. Another way of satisfying financial obligation which occurs when enough assets to pay off the loan at maturity are put into a trust account. Deferral method of accounting for contribution records the contribution as revenue when the related expenses are recognized. Deferred income tax asset, the amount of income tax recoverable in future period in respect of deductible temporary differences, the carry forward of unused tax losses, and the carry forward of unused tax credit, also known as deferred tax asset. Deferred income tax liability, the amount of income tax payable in future periods in respect of taxable temporary differences, also known as a deferred tax liability. Deferred revenue, payments received from customer in advance for services that have not been performed or good that have not been delivered. Deferred revenue is also known as unearned revenue. Deferred taxes, additional estimated taxes related to the temporary differences of accounting and tax treatment of income and expenses. They are equal to the net temporary differences time to the substantively enacted tax rate and are not discounted. Deficit in retained earnings, a debit balance of retained earnings. Deficit benefit obligation, DBO, the present value of all future employee benefits estimated to be paid as determined by the actuary. Defined benefit plan, a plan in which the future benefits to be paid out to employees on retirement are defined by the term of the plan. The term of a defined benefits plan may either specify benefit to be paid out to employees under the plan or provide a formula for the determination of the future benefits. Defined contribution plan, a plan in which the employee is required to contribute a specific amount to the pension plan on behalf of the employee on an annual basis. The amount that will be paid to the employee in retirement will be determined by the amount of money accumulated in the employee's name in the pension plan. Demand deposit, a deposit of money that can be withdrawn without prior notice. Depletion, the systematic allocation of natural resources and the underlying infrastructure to the time period in which the resource is extracted. Deposit in transit, deposit recorded in the general ledger GL, cash account that have not yet cleared through the bank account. The recognition involves removing a previously recognized financial asset or liability from an entity's statement of financial position. Derivative, an instrument that derives its value based on an underlying asset or benchmark. Determinable liability, a liability that has a known existence, amount, and timing. Development, the application of research findings or other knowledge to a plan or design for the production of new substantially improved materials, devices, products, processes, systems, or services before the start of commercial production or use. Diluted earnings per share, diluted EPS, an hypothetical measure of company earnings attributable to each common shareholders, assuming all dilutive securities have been converted to common share. Dilutive securities, securities that could result in a reduction in earnings per share or an increase in loss per share resulting from the assumption that these convertible instruments are converted, that these optional warrants are exercised, or that these ordinary shares are issued upon the satisfaction of specified condition. Dilutive securities are also known as potential common share. Direct financing lease normally arises when a lessor act as a financing intermediary between a manufacturer or leader or dealer and a lessee. A lease that, from the point of view of the lessor, transfers substantially all the benefits and risks incidental to ownership of property to the lessee, and at the inception of the lessee, the fair value of leased property is the same as its carrying amount to the lessor, usually not a manufacturer or dealer. Direct labor, the salaries and wages paid to workers that can be directly attributed to specific finished product. Direct material, raw materials that becomes part of the finished good. Direct method of preparing a statement of cash flow, the method that report cash flow from operating activity into categories such as cash paid to suppliers and cash received from customer to determine the net operating cash flow. Direct quotation provides the number of Canadian dollar required to purchase 1 unit of foreign currency. Discontinued operation, a component of an entity that either has been disposed or is classified as held for sale HFS and meets one of the following criteria. 1. It represents a separate major line of business or geographical area of operation. 2. It is part of a single coordinated plan to dispose of a separate major line of business or geographical area of operation. Or 3, it is subsidiary acquired exclusively with a view to resell. Discount may arise on obligation if a financial liability does not pay interest or the stated rate of interest is less than the market rate of interest at the time of issuance. Discount amount, the discount percentage offered by the seller. Discount period, the number of days within which the consumer must pay the invoice in order to be entitled to the discount amount. Disposal group, a group of asset and liability to be disposed of together in a single transaction. Distinct, the good or services provide the customer will benefit on his own, and the promise to transfer the good or service is separately identifiable from the other promises in the contract. Dividend, the distribution of profits to shareholder. The distribution of profit to holder of shares in proportion to their holdings of a class of shares. The distribution is normally by way of cash or additional share. Dividend declaration date, the date that the company board declares a dividend payable at a subsequent time to the company shareholder. Dividend payable arises when a corporation board or director has declared a dividend owing to shareholders but has not yet distributed a cash payment. Dividend payout, a ratio that measures the amount of income that translates to dividend in a year. It is an indication of how much an entity earnings are paid out to the shareholders through cash dividend. Double entry accounting system, an accounting system where every entry to an account requires a corresponding and opposite entry to a different account. Downstream sale by the investor or parent to the associate or subsidiary. Earnings per share, a measure of profitability that represents the amount of earning available to common shareholders on a per share basis. Economic benefit, a benefit that can be quantified in monetary term. Economic identity assumption. Under this assumption, financial statement reports only activity of the business, not activity of the owners or other businesses. Economic event, the transfer of control of an economic resource from the one party to another party. Economic life, the period of time during which the asset is expected to be economically usable by one or more user, also known as the economic useful life. Economic resource, a right that has the potential to produce economic benefit. Fa- Effective interest method, a method effective interest method, a method used to calculate the amortized cost of a financial asset or a financial liability and used in the allocation and recognition of the interest revenue or interest expense in profit or loss over the relevant period. Effective interest rate. The interest rate that result in a present value of the financial instrument equal to the financial measurement value of the asset. Eligible hedge item. Items the entity want to protect from exposure to a variable such as foreign exchange rate changes. Elimination entries. Entry that adjust the parent and subsidiary financial statement as part of preparation of consolidated financial statements. They are similar to journal entry except that they are only used to prepare the consolidation and are never posted to the general ledger. Elimination method, a method of adjusting for revaluation where the accumulated depreciation is first reset back to zero and the asset cost adjusted accordingly. After revaluation, the asset would be on the books with a cost equal to a fair market value and accumulated depreciation of zero. Employment insurance, a mandatory federal insurance program that provides income protection for a limited period of time for loss of job or parental leave. Enacted tax rate or effective tax rate. The tax rate passed by the relevant government authority for application in income tax calculation. Income rent accounting. An entry is made at a time a good slash service is ordered to indicate that resources must be set aside to meet the eventual obligation on delivery of the good slash service. Users then know that funds have been committed even if no expenditure occurred. End user computing. The widespread use of personal computers by non-IT managers and staff. Endowment contribution endowments. Contributions where the contributor specified that the principal contribution must be maintained permanently or for an extended period of time. Endowment fund. This fund includes all endowment received from donors. Entity-specific value. Refer to the value of the asset based on how the entity planned to use it. Equity. The residual interest of the entity asset after deducting the liability. Equity income. The investor share of the associate net income. Equity instrument. An instrument in a share in another company. Equity method. Method of accounting whereby the investment is initially recognized at a cost and adjusted thereafter for the post-acquisition change in the investor share of the investee net asset. Equity pickup. The investor's share of the change in the associate or subsidiary retained earnings since the acquisition date to the current date adjusted for accumulated amortization of the acquisition differential, impairment losses, and any unrealized intercompany profit at the current date. Error. A non-fraudulent discrepancy in financial documentation. Estimated liability. Liability that requires a degree of judgment to come up with an estimate of either amount or timing of the liability. Ethical issue. A situation or problem in which the action of an individual or the action of an organization and of an organization and individual an individual is involved with might harm one or more people or group or might violate ethical values. Event after reporting period, EFRS. Those events favorable and unfavorable that occur between the end of the reporting period and the date when the financial statements are authorized for use. Used in IFRS. Exchange amount. The consideration paid or received as agreed to by the related parties' sales price. Exchange rate. The ratio of exchange for two currency. This is the date on which the employee cashes in the option to or share appreciation right. Exercise price, the price per share at which the owner of an option is entitled to buy or sell the underlying security. Expected cost plus a margin approach. A method of estimating the standalone selling price of a good or service where the seller forecasts his expected cost of each deliverable and add an appropriate margin to each to estimate the selling price. Expected value. Under this method, which is best suited when a contract has multiple income, the range of possible outcome and the probability of each is determined. The sum of probability weighted amounts is issued as the measurement. Expenses. Decreases in asset or increases in liability that result in decreases in equity or other distribution to equity owners. Expiration date. This is the last day on which the employee may exercise the option or share appreciation right. Past this date, the option is forfeited. Exploration and evaluation expenditure. Costs related to exploring and evaluating mineral resources before technical feasibility and commercial viability of extracting the mineral resource have been determined. This can include acquisition right to explore, geological studies, exploration drilling, sampling, and trenching. Exploration and evaluation phase. The second stage in the process of searching for and extracting mineral resources involves searching for mineral resources and determining the technical feasibility of extraction. Costs include right to explore, geological and other study, exploratory drilling, trenching, and sampling. Extensible Business Reporting Language, XBRL, an XML-based system that enable business reporting that allow financial statements and their notes to be uploaded, searched, and used by interest parties. Extensible Markup Language, XML, a system for encoding document for transmission over the internet, allowing the information to be read by end user in various formats. External user who do not work in the company. Face value, the amount that the issuing entity will pay at the maturity date. The face value is also known as the par value. Factoring, accounting receivable that are transferred or sold to a third party. Fair value, the price that would be received to sell an asset or pay to transfer a liability between parties that are not related. Fair value enterprise, FVE. Method, the non-controlling interest that is measured as the fair value of the non-controlling interest, shareholders' ownership interest. Also called the full goodwill approach. Fair value hedge, a hedge of exposure to exchange in fair value where cash flow are fixed, often due to foreign currency fluctuation. So the fair value of the hedge item fluctuate with changes in, for example, the foreign exchange rate. Fair value model, remeasuring all investment properties at fair value at each reporting date. Faithful representation. The accounting information appropriately reflects the substance of the economic event that occurred. Fair value through profit or loss investment. An investment that is being held for trading purposes. Changes in the fair value are recorded through the income statement. Fair value through other comprehensive income investment. An investment that is not held for trading purposes. Changes in the fair value are recorded through other comprehensive income. Feedback value, information that confirms or changes previous estimate. Finance lease, a classification used by the lessor for a lessee that transfers substantially all the risk and reward incidental to ownership of an asset. Title may or may not eventually be transferred. Financial accounting, the process of measuring the financial performance of an entity using standard convention to create a set of financial statements. Financial asset, an asset that is cash, an equity instrument, or another entity, a contractual right to receive cash or another financial asset from another entity, or a contractual right to exchange financial asset or financial liabilities with another entity under conditions that are potentially favorable to the entity. Financial liability, any liability that is a contractual obligation to deliver cash or another financial asset to another entity, or a contractual obligation to exchange financial asset or financial liabilities with another entity under conditions that are potentially unfavorable to the entity. Financial statement, a written report for the combined impact of a business financial transactions. Financial statement analysis. Using the result presented in the financial statement of an entity to evaluate its profitability, liquidity, asset management, and solvency. Financial activities that result in changes in the size of composition of the contributed equity and borrowing of the entity. Financing cash flows that arises from transactions with creditors and owners other than those of an operating nature. Finished goods, asset held for sale in the ordinary course of business. Finite life, a useful life that will continue for a defined period of time. First in, first out, FIFO, a cost allocation method where the cost of the older inventory is assigned to the cost of goods sold and the cost of the newer inventory is assigned to the ending inventory. Fixed lease payment. Lease payments that are known, set at the beginning of the lease and made at regular intervals. Fixed production overhead cost. Overhead costs that stay consistent regardless of the volume of production. Fixed price contract, a contract that requires the customer to pay the entity a fixed amount for completing the contract. For profit business, a business that exists to generate profit. Foreign currency, a currency other than the company's operating currency. Foreign currency risk, the risk that the fair value or future cash flow of a financial instrument will fluctuate because of changes in foreign exchange rate. Foreign currency risk is also known as the foreign exchange risk. Foreign currency transaction, a transaction that occurs in a different currency than that in which the company normally operates. Foreign operation, an entity that is a subsidiary, associated, joint venture, or branch of a reporting entity, the activity of which are based or conducted in a country of or currency different than that of the reporting company. Forward contract, a contract between parties to buy or sell an asset at a specified price on a specific date in the future. Example include commodities and foreign currency. Forward contract date, the date on which the forward contract is entered into. Forward contract rate, the exchange rate specified in the forward contract for future delivery or sale of the foreign currency. Forward rate, the exchange rate for future purchase or delivery of the underlying assets such as a foreign currency or commodity. Fraud, an intentional deception to secure an unfair or unlawful gain. Free cash flow, a ratio that measures the cash that a company has available to fund operation provides an actual dollar value of cash flow available after investing in ongoing capital needs. Freight on board FOB destination. The legal title of the good transfers when it arrives at the customer place of business. Therefore, delivery is not considered to be completed until the good reach the customer and are accepted. Freight on board shipping point. The legal title of the good transfer when it leaves the seller's place of business. In this situation, delivery is considered completed when the goods leave the seller warehouse at the start of shipping. Freight in. The transportation cost associated with the delivery of goods from a supplier to the receiving entity. Full cost method, a method of capitalizing exploration and evaluation expenditure where all the costs related to exploration and evaluation, including those related to unproven mineral reserves, are capitalized. Function of expense refer to the use of which the expense has been incurred. Functional currency, the currency of the primary economic environment in which the company operates, that is, the currency used in day-to-day operation. Fund accounting, a self-balancing set of accounts that allows the organization to segment its financial statement based on the nature of its various project programs and expenditure. Fund balance, summarize the net excess or deficiency of asset over liability for each separate fund. The fund balance is also known as the net asset balance. Futures contract, a forward contract trade on a stock exchange with a standardized price and settlement date. Future or deferred income tax, an asset or liability that is recorded on the balance sheet related to estimated future tax consequences that result from the difference in timing of income recognition between tax and accounting method. Gains, increases in equity from incidental transaction or event affecting an organization. This includes all other transaction, event, and circumstances affecting the entity except those that result from revenue or contribution from owners. General fund. This fund include all items that are not subject to restriction in use. General ledger, a record of accounting transaction in chronological order. General ledger, a record of a business asset, liability, equity, income, and expense account which increases and decreases to each account included. General accepted accounting principle, an accepted set of accounting standards that include board principle, procedures, concept, and standards. Going concern. Business that is going concern. A business is a going concern if it will continue to operate for the foreseeable future. Going concern assumption. Under this assumption, a business will and going concern is expected to continue to operate for the foreseeable future, specifically to be able to use the benefit from the recorded asset and pay off the liability. Goodwill, an asset representing the future economic benefit arising from other assets acquired in a business combination that are not individually identified and separately recognized and only recognized where deemed to have future value. Internally generated goodwill is never recognized. Goodwill method of admitting a new partner. A method of admitting a new partner to a partnership where the total net asset of the partnership is measured based on the new partner's capital contribution. Any difference between the current identifiable net asset balance and the newly measured net asset is recorded as goodwill and allocated between the existing partner based on the proportion of net income or loss. Governance. The system of rules, practices, and processes by which an organization is directed and controlled. Government. Elected and appointed policymakers and administrators who together perform the executive function. This definition extends to federal, provincial, territorial, and local government. Government business enterprise, a government organization that is a separate entity with the power to contract in its own name and can be sued or be sued, sell goods and services to individual and organization outside of the government reporting entity as its principal activity has been delegated the financial and operational authority to carry on a business and can, in the normal course of operation, maintain its operation and meet its liability from revenue received from sources outside the government reporting. Government component, an integral part of a government such as a department, ministry, or fund. It is not a separate entity with the power to contract in its own name and cannot sue or be sued. A government entity, an entity that provides services to the general public funded by taxpayer. Government grant, assistance by the government in the form of transfer of resources to an entity in return for past or future compliance with certain conditions relating to the operating activities of the entity. It includes forgivable government loan, government not-for-profit organization (NPO), a government organization that is a separate entity with the power to contract in its own name and that can be sued or be sued as counterpart outside the public sector is an entity normally without transferable ownership interest, is an entity organized and operated exclusively for social, educational, professional, religious, health, charitable, or other non-for-profit purpose, and has members, contributor, and other resources providers that do not, in such capacity, receive any financial return directly from the organization. Government organization, any organization controlled by a government that is a separate entity with the power to contract in its own name and that can sue or be sued. Government transfers of money or asset from one government to another. Grant date, this is the date on which the option or share appreciation right are granted to the employee. Grant related to asset, a government grant whose primary condition is that an entity qualifying for the grant should purchase, construct, or otherwise acquire long-term asset. Grant related to income, a government grant that provides resources to cover expenses, such as a grant for salaries and wages. Gross investment in the lease, the total of the lease payment receivable under a finance lease and any unguaranteed residual value. Gross margin, a ratio that measures the percentage of each sale dollar that remain after recovering the cost of goods sold. It measures the ability of the business to sell goods for more than the cost to make. Gross profit, a calculated amount equal to net sale less cost of goods sold. Gross profit method, a method for estimating the cost of ending inventory by applying the gross profit margin to net sales. Guaranteed residual value, the amount specified in the residual values guaranteed about the asset value at the end of the lease. Hardware, physical element of the information system, including computer servers, monitor, printers, and storage devices. Hedge transaction, an investment that changes in value in a manner that offset the change in value of an underlying asset. Hedge accounting, an optional process that allows an entity to account for two separate transactions as one legal item. It is intended to offset temporary profit or loss volatility, volatility due to differences in timing or valuation of an hedge item and the hedging instrument. Hedge of a net investment in a foreign operation. A variation of a cash flow hedge that is used to hedge foreign exchange risk related to an investment in an entity with a functional currency that is different from the reporting entity functional currency. Hedge ratio, the relationship between the quantity of the hedging instrument and the quantity of the hedge item in terms of relative weighing. Hedge item, an item the entity wants to protect from exposure to a variable such as foreign exchange rate change. Hedging, a risk management process that involves identifying and quantifying a risk and then taking a specific action to offset that risk. Hedging instrument, an item that is used to reduce or eliminate exposure from the risk of the variable on the hedged item. Hedging relationship. The hedging relationship is an accounting concept introduced by the hedge accounting standard. It refers to the correlation between a company asset or liability and the financial derivative used to hedge the economic risk associated with it. Held for sale, HFS, an asset that will have its carrying value recovered through a sale transaction rather than through continuing use. Held for trading asset, an asset that is acquired or incurred principally for the purpose of selling or repurchasing it in the near term or on initial recognition is part of a portfolio of identified financial instruments that are managed together and for which there is evidence of a recent actual pattern of such of short-term profit taking or is a derivative. Historical cost. Provide monetary information about financial elements that reflect the price paid when the financial element transaction originally occurred. Horizontal analysis. Measure the change as a percentage in financial statement line item year over year to see if there are trend or inconsistencies in performance. Identifiable. In relation to an intangible asset, identifiable means it is either separable and can be transferred or sold to another entity or arises from a contractual or other legal rights. Identifiable net asset, the asset and liability of the investee that have a value at the date of acquisition. This is also known as the net identifiable asset. Identifiable net asset, INE approach. The non-controlling interest is measured as the non-controlling interest shareholder ownership percentage of the fair value of the identifiable net asset of the subsidiary, also called the party goodwill approach. Impairment occurs when an entity is unable to recover the carrying amount or carrying value of an asset. Impairment loss. The amount by which the carrying amount, that is the net book value of an asset or a cash generating unit, exceed its recoverable amount. It is the amount that need to be charged to expense. Import duty. A tax collected by a country's custom authorities on import. Impracticability, cumulative effect. When it is impracticable to determine the cumulative Effect of the required change at the beginning of the current period. The change in the accounting policy shall be applied prospectively from the earliest period possible. And practicability period specific effect. When period specific effect cannot be determined, the entity shall apply the new accounting policy to the carrying amount of the net asset at the beginning of the earliest period, which may be the current period, for which retrospective adjustment are possible and practicable. Although the entity has made every reasonable effort to determine the impact of the accounting change, its effect cannot be determined. Incidental transaction. A transaction that is not part of an entity's ordinary activities. Income statement. A statement that report an organization performance over a period of time, also known as the statement of comprehensive income or statement of profit or loss and other comprehensive income. Incremental borrowing rate, IBR, the rate of interest the lessee would have to pay on a similar lessee or a similarly secured loan over the same term. And definitive life, a useful life that will continue for a foreseeable future period. Indirect labor, the salaries and wages paid to workers that cannot be directly attributed to specific finished product. And direct material, material used in the manufacturing process that do not become an integral part of the finished good. And direct method of preparing a statement of cash flow, a method that reconciles the profit or loss to the net operating cash flow. Indirect quotation, provide the number of foreign currency unit needed to purchase one Canadian dollar. Information system, the broader perspective in which management use information technology to create and support systems that allow an organization to pursue and achieve its strategic goals. Information system relevant to financial reporting and communication. Procedures and record design and established to initiate record process and report transaction, resolve and correct processing of transaction process and account for system override or bypass of control, transfer information from transaction processing system to the general ledger GL, capture information relevant to financial reporting for event and condition ordinary transactions, ensure information required to be disclosed by the applicable financial reporting framework is accumulated, recorded, processed, summarized, and appropriately reported. Defined and communicate the financial reporting role and responsibility and significant matter relating to financial reporting. Information technology, IT, computer, hardware, software, and network infrastructure tools. Information technology, IT control, a control that is either fully or in part automated. Infrastructure as a service, LAAS. Subscribers can access traditional infrastructure resources such as storage, virtual server, firewalls, and software images across an enterprise on a pay-for-use model. Initial direct cost, lessee. Incremental costs incurred that are directly attributable to negotiating and arranging a lessee, including commission, legal fee, and internal cost. Initial direct cost, lessor. Incremental costs incurred by a lessor offering financial leases that are not manufacturer or dealer leases. The costs are directly attributable to negotiating and arranging a lessee, including commission, legal fees, and internal cost. Initial direct costs are included automatically in the net investment in the lessee through the interest rate choice or for certain lessee input method, a method that recognizes revenue based on an estimate for of the percentage of completion of the project and uses input measures such as resources consumed, labor hours expended, cost incurred, time elapsed, or machine hours used. Installment payments. Interim payments that a company makes for tax based on the company estimated taxes payable for the year. Intangible asset. Integrated op- Intangible asset. An identifiable non monetary asset without physical substance. Integrated operation. The functional currency of the foreign operation is the same as the reporting entity. The foreign entity operates as an extension of the parent. Intercompany transactions, sales or purchases of inventory or other business activity between a parent company and its subsidiaries or other related entity. Interest coverage, a ratio that measures the company's ability to pay its interest payments, effectively calculating the number of times it could pay its interest charges from current earnings before interest and taxes. Interest rate implicit in the lease. The expected rate of return interest rate earned by the lessor. The implicit rate is defined as the rate of interest that causes the present value of the lease payments and the unguaranteed residual value to equal the total of the fair value of the asset and initial direct cost of the lessor. Interest rate risk. The risk that the fair value or future cash flow of a financial instrument will fluctuate because of changes in interest rates. Interest rate swap. A contract in which two entities agree to exchange interest rate on debt such that one set of cash flow is replaced by another set of cash flows of equal expected value at inception. Interim financial report. A report for a period shorter than 1 year may be either complete or condensed financial statements. Interim financial reporting. Reporting by an entity of its financial result at a period other than its entity year end. Internal control. An organizational plan designed to safeguard the asset of an entity and ensure the integrity of the financial reporting system. Internal restrictions. Restrictions on the net asset or fund balances imposed by the NPO itself outside of any external restrictions. These internal restrictions are often referred to as the reserves or appropriations. Internal users who work for the company. International Accounting Standard Board, IASB, a body that is formed for the purpose of harmonizing international accounting standard and that is responsible for developing IFRS, which are then adopted by the ACSB. International Financial Reporting Standards, IFRS, a set of global standards developed by the International Accounting Standard Board, IASB, that is used for financial reporting. Publicly accountable enterprise must apply IFRS, while private entity can elect to follow IFRS if desired. Intrinsic value, equal to the market value minus the exercise price. Inventory. Inventory is an asset that is held for sale in the ordinary course of business, finished good, in the process of production, such as a sale, work in progress, a material or supply to be used in production or in rendering services, raw material or consumable. Inventory count, the physical verification of the quantities and condition of item held in inventory. Inventory days, a measure of the number of days that goods remain in inventory before they are sold. Inventory markup, the amount that the retailer adds to the cost of inventory to determine its selling price. Inventory shrinkage, the excess amount of inventory listed in the accounting system as compared to the result of the actual physical inventory count. Inventory turnover, a ratio that measures how quickly inventory is sold. It calculates the approximate number of time an inventory was sold during the year. Investee, the party that received the investment. Investing activity, the acquisition and disposal of long-term asset and other investment not included in cash equivalent. Investing cash flow that arise from the purchase and sale of the infrastructure necessary to run the business. Investment, an asset purchased with the goal of generating income or appreciating in value. Investment property, land and or building held to earn rental income for the capital appreciation. Investor, the party that makes an investment or cash. No, the party investor, the party that make an investment of cash or resources in another organization. Joint arrangement, an arrangement that binds two or more parties by ways of contractual agreement giving parties joint control. Joint control, contractual agreement, contractually agreed sharing of control of an arrangement. The decision require the unanimous consent of the party sharing control. Joint operation, parties have right to asset and obligation for liabilities of the joint arrangement. These parties are called joint operation. Joint venture, JV. Parties have right to only the net asset of the joint arrangement. These parties are called joint venture. Jointly controlled asset, ASPE. A joint arrangement that involves the joint control and often the joint ownership by the investor of one or more assets contributed to or acquired for the purpose of the joint arrangement and dedicated to the purpose of the joint arrangement. Jointly controlled assets are used to obtain benefit for the investor. Similar to joint operation under IFRS. Joint control enterprise, ASPE, a joint arrangement that involves the establishment of a corporation, partnership, or other enterprise in which each investor has an interest. The enterprise operates in the same way as other enterprises, except that a contractual agreement between the investors establish joint control over the economic activity of the enterprise, similar to joint venture under IFRS. Jointly controlled operation, ASPE, a joint arrangement that involves the use of the asset and other resources of the investors, rather than the establishment of a corporation, partnership, or other enterprise or a financial structure that is separate from the investor themselves, similar to joint venture under IFRS. Journalizing, the process of recording transaction as journal entries, last in, first out. LIFO, a cost allocation method where the cost of the newer inventory is assigned to the cost of goods sold, and the cost of the older inventory is assigned to the ending inventory. Not permitted by IFRS. Lease, a rental contract whereby the lessor grants the lessee the right to use an asset for the agreed period of time in return for payment of series of payments. Lease component, the portion of a lease contract that pertain to the right to use the leased asset rather than to services associated with the right of use asset. Lease incentive referred to when the lessor paid the lessee an amount associated with the lease or reimbursed the lessee for costs the lessee incurred as an inducement to enter due to the lease contract. Lease payment, the total payment made by the lessee to the lessor over the lease term. Lease term, the non-cancelable period of which the lessee has agreed to lease the asset. The lease term also include optional renewal term if it is reasonably certain that the lessee will exercise the option. Lessee, user of an asset that makes payment to the lessor. Lessor, owner of the asset that receives payment from the lessee. Liability, a present obligation of an entity to transfer an economic resource as a result of past event. An obligation is a duty or responsibility that an entity has no practical ability to avoid. Limited liability partnership, LLPs, legal structure that allow partners to form a partnership where their risk is limited to their capital contribution, unless they are active in the management of the partnership. Limited liability for shareholder. Shareholder losses are limited to their investment in the shares. Line of credit. Credit extended by a lender to a borrower. Liquidation. The process of bringing a business to an end and distributing its net asset to its claimant. Liquidation value. The amount a company can sell its asset for if it goes out of business, which is generally less than fair value. Liquidity, the extent to which an item can be converted to cash. Liquidation ratio, ratios that assess a company's ability to pay short-term liability as they come due. Liquidity risk, the risk that an entity will have difficulty paying financial liabilities settled with cash or other financial asset. Losses, decreases in equity from incidental transaction or event affecting the an organization. This includes all other transaction events and circumstances affecting the entity except those that result from expenses or distribution to owners. Low value lease. A lease assessed on a asset by asset basis that is a non-material amount and can be treated as a non-lease transaction. Management accounting, the process of taking financial information and non-financial information from a business and using it to make short-term and strategic long-term decisions to help the business reach its goal. For instance, how to price a product and how many of a certain good to manufacture. Management bias occur when individuals in position of power within an organization allow their personal belief or preference to influence their decision making, leading to improper accounting. Management decision support system, information system designed to help management control the business and make decision. Management discussion and analysis, a disclosure issued with the annual report to provide additional management insight into the financial statements and the business, containing both historical and future-oriented information. Management Information System, MIS, a system that processes non-financial transactions such as scheduling, job description, and tracking, and product development to provide company with the ability to make business decisions. Mandatory redeemable preferred share where the issuer of the share must redeem the share on or before a specified date. Manufacturers or dealer lessee. A lease, a manufacturer or dealer lease. A lease offered by a manufacturer or retailer as a financial mechanism to facilitate the sale of its own product. Manufacturing businesses. Businesses that transform raw material into finished product which are then sold for profit. Margin, the difference between the sale price of good and the cost of making or buying the good. Markup percentage, the percentage above cost that determine the inventory selling price. Material error, an error in the financial information that could impact the decision-making ability of the user. Materiality, information is considered to be material if omitting it would influence the decision of its user of the financial information. Maturity date, the date on which the final payment of principal and all remaining interest on a loan or other financial instruments such as a bond or a term deposit is due. Measurement, the process of placing a monetary value on element recognized in the financial statement. Merchandise inventory that is purchased for resale. Merchandising business, a business that's purchase finished good and sell them to customer. Mineral resources, non-regenerative natural resources including metal, mineral, non-metal, mineral oil, and natural gas. Misappropriation of funds, the unauthorized, improper, or unlawful use of funds or other property for purposes other than that for which they are intended. Monetary asset or liability, money or claims to future cash flow that are fixed or determinable in amount and timing by contract and or other arrangement. Examples are cash and account and note receivable and payable in cash. Monetary Money market fund, a mutual fund that invests solely in cash and cash equivalent securities. Money market instrument, a short-term debt instrument that is highly liquid and bears low risk. Monitoring controls, policies, and procedures designed to assess the quality of internal control performance over time. Most likely amount. Under this method, which is best suited when a contract has two possible outcomes. The single most likely amount in a range of possible amount is selected for measurement. Multiple step income statement. An income statement presented an income statement presenting a number of subtotals to calculate net income, for example, gross profit, income from operation. Natural resource, a type of long-lived tangible asset that can only be placed by an act of nature, such as metal, oil, and minerals. Nature of expense, refer to the source of the expense. Net book value, cost less accumulated depreciation. Net book value is also known as the carrying value or carrying amount of the asset. Net defined benefit asset, a lesser of A, the planned asset less the present value of the defined benefit obligation, and B, the asset ceiling. In the absence of an asset ceiling, the defined benefit asset is simply the planned surplus. Net defined benefit liability, the present value of the defined benefit obligation less the planned asset, also referred to as the planned deficit. Net earning available to common shareholder, the profit or loss of the entity less dividend on cumulative preferred shared, regardless if paid, less dividend declared on non-cumulative preferred shared. Net interest cost consists of interest expense on the defined benefit obligation net than expected interest income earned on planned asset. Net investment in the lease, a term used by the lessor that referred to the gross investment in the lease discounted using the interest rate implicit in the lease and recorded as a leasee receivable by the lessor at the inception of the lease. Each component within the gross investment must be discounted to reflect the timing of its cash flow. Net period due, the number of days within which the customer must pay the invoice in order to avoid interest cost. Net purchases, a calculated amount equal to purchases, less purchase return and allowances, net less purchase discount. Net realizable value, NRV, the net amount that a company expects to collect from an asset. Net sales, a calculated amount equal to sale less sale return and of allowances and less sale discounts. Networks, allow computers to communicate with each other and facilitate the distribution of data and other resources. Neutrality, information is neutral when it is provided in an unbiased way. Non-adjusting event, material events that are not related to a condition that existed prior to period end. Non-capital loss, tax losses which are related to the operational activities of the business. Non-cash transaction, a transaction that does not involve cash. Non-controlling interest, NCI, shareholders, the non-controlling shareholders who own the remaining shares not owned by the parent. Non-cumulative dividends, dividends that do not accumulate if they are not declared and paid. Non-cumulative preferred share, a share that does not require previously missed dividend payment to be paid. Rather, only the current entitlement must be paid before monies can be distributed to the common shareholders by way of dividend. Non-interest bearing note, a debt for which there is no documented requirement for the borrower to pay the lender any rate of interest. Non-lease component, the portion of a lease contract that pertains to the provision of services associated with the right of use asset provided by the lessor, rather than the right to use the leased asset. Non-monetary asset or liability, an asset or liability that is that are an asset or liability that are is not monetary. Example are inventories, investment in common stock, property, plant, and equipment, and liability for rent collected in advance. A contractual right to receive services in the future is a non-monetary asset, and a contractual obligation to perform services in the future is a non-monetary liability. Non-monetary transaction, an exchange that occurs between parties where both items exchange are non-monetary in nature. Non-operating item, income, expense, gain, losses incurred that are not related to the core operation of the organization. Non-reciprocal, non-monetary transaction, a one-sided transfer of non-monetary asset, liability, or services without consideration. Non-refundable fee, a fee that will not be refunded and is commonly paid upfront for near the inception of a contract. Non-strategic investment, an investment in debt or equity instrument made for the primary purpose of earning income through the receipt of interest or dividend, or by selling the investment for more than the amount paid. A non-strategic investment is also known as a passive investment. Non-trade receivable, any amount due to an entity unrelated to the selling goods and providing services. Normal balance, the side, debit or credit. The account would normally have a balance in, as well as the type of transaction that increases in its balance. Normal course of operation, a transaction type that is usually, frequently, or regularly undertaken by the enterprise for the purpose of generating revenue. Not-for-profit organization, a mission-based organization that further a social cause. Note holder, the party that hold the note and receive payment from the note maker. The note holder record a note receivable. Note maker, the party that makes the note and promises to pay the note holder. The note maker records a note payable. Note payable, formal written promises to pay a fixed sum of money at a specific time in the future. Note receivable, a claim for which formal agreement is issued in order to settle the receivable. NSF check, a check that did not have enough fund in the associated account to pay the check. Number of share issued, the total number of shares of each class issued by the corporation. Number of share outstanding, the total number of issued shares of each class that are owned by investors. Obsolescence, an asset is outdated. As asset is outdated and no longer used, often result in impairment of the asset. On account, a business creates a record that they are owed the money from a particular customer. Onerous contract, a contract in which the unavoidable cost of meeting an obligation exceeds the economic benefit expected to be earned by fulfilling the contract. Operating activities, the principal revenue producing activities of the entity and other activities that are not investing or financing activities. Operating cash flow that arise from the normal day-to-day operation of a business. Operating currency, the main currency used by a business in its business dealings. Operating cycle, the length of time it takes for the organization to purchase, construct inventory, sell it on account, and collect the proceeds from the customer. Operating expense that are necessary to keep the organization operational and producing revenue. Operating lease, a classification used by the lessor for a lease that does not transfer substantially all the risk and reward incidentals to ownership of the underlying asset. Operating segment, a component of an entity that engage in business activities from which it may earn revenue and incur expenses whose operating Results are regularly reviewed by the entity chief operating decision maker to make decision about allocating resources and to assess performance and for which discrete financial information is available. Operation support system, information system designed to handle the day-to-day operation of the business. Option, a contract that provides the right to buy or sell a specific quantity of an asset at a specific price within a certain time frame. Example includes warrant and stock option. Option pricing model. Option pricing theory uses variables, stock price, exercise price, volatility, interest rate, time to expiration to theoretically value an option. Essentially, it provides an estimation of an option fair value which traders incorporate into their strategies to maximize profit. Other comprehensive income include items that are not allowable to be calculated. No, that include items that are not allowed to be included in profit or loss and are therefore presented separately. Period. Generally, other comprehensive income (OCI) contains certain gains and losses that have not yet been realized. Other employee future benefit consist of short and long-term employee benefit that are not pension plans. Other government organization or a government organization that is a separate entity with the power to contract in its own name and that can sue or be sued and is neither a government business enterprise nor a government not-for-profit organization. Other long-term employee benefits excluding pension plans that are not expected to be settled in full within 1 year after the end of the annual reporting period, in which the employees render the related service. Output method, a method that recognizes revenue based on direct measurement of the value to the customer of the good or services transferred to the date relative to the remaining good or services promised under the contract. Outstanding checks issued that have not yet cleared through the bank account. Overdraft, a deficit balance caused by withdrawing more money than the account owed. Own party award, an award supplied by the company making the sale. Owner occupied property held by the owner for use in the production of goods or services or for administrative purposes. Parent, an entity that controls the net asset of another entity through voting control of its share. Partial capitalization method, a method of capitalizing exploration and evaluation expenditure where only some costs that would otherwise be eligible for capitalization are included as an exploration and evaluation asset, and the rest are expensed. Partner, an individual who shares ownership of a partnership and is jointly responsible for profit and losses. Partnership, a business structure made up of two or more individual corporation, trust, or partnership who contribute cash as other asset and or services to the business and share in the management and profit of the company. Partnership agreement, legal contracts that include the basic information about the partnership, such as the name, location, purpose, and date of inception. Should also include detail about the partners themselves and how the mechanics of the partnership will work. Past service cost, the amount the employer is required to contribute to the plan for past service granted to the employee in the period as consequence of the plan initiation or amendment. Payment date, the date that the company pays the cash dividend or the stock or property dividend is distributed. Payment term, the timing and amount of cash to be paid by the customer. Payroll liability, unpaid salaries and benefit expenses, as well as tax and other amount required to be withheld from employees' paychecks according to government regulations. Peer group analysis compares critical aspects of the entity's Performance on a spot comparative basis with other entities in the same industry. Pension expense. Expenses related to a defined pension are recognized in each period that includes the current service cost, past service cost, and net interest cost. Pension plan. Any arrangement whereby a program is established to provide retirement income to employees. Pension trust. An independent legal entity that holds the asset of pension plan and make payments to the retirees trust are managed by pension trustees. Percentage of completion method. A method that applies a rational and consistent basis to determine revenue to recognize and is used when performance consists of more than one act. Percentage of credit sale method. A method used to determine bad debt expense as a percentage of credit sales. This is also known as the income statement approach. Performance bonus, a form of additional compensation paid to an employee as the reward for achieving specific goals. Performance obligation definition, a promise to a customer to transfer one of the following: a good or service that is distinct, or a series of distinct good or services that are substantially the same and that have the same pattern of transfer to the customer. Periodic inventory system, a system that records each inventory purchase in a purchase account. Inventory quantities are determined through periodic counts performed at least once per year at year end. Permanent account, accounts that carries balances forward period over period, such as asset liabilities and owners capital, share capitals, retained earnings. Permanent differences between accounting income and taxable income that do not reverse over time. Perpetual debt, an instrument where there is a contractual right to receive payment of interest on account at fixed date extending into the indefinite future, either with no right to receive a return of principal or a right to return of principal under terms that make it very unlikely or very far in the future. Perpetual inventory system, a system that keeps a running balance of inventory in a general ledger and that is increased for each purchase and decreased for each sale. Physical control, a control that is manually performed by an individual. Pent asset held by the pension trust for the benefit of the employee and retirees. The assets are held by an entity, the trust, that is legally separate from the reporting entity and exists solely to pay the fund employee benefit. The pension trustee typically invests the cash received from the company in different asset classes, including bonds, stock, and real estate, with a view to increasing the value of the plan asset over time. Plan curtailment, a significant reduction in a pension plan benefit or in the number of employees eligible for benefits. Plan deficit occurs when the present value of the defined benefit obligation exceeds the fair value of the planned asset. Plan surplus occurs when the fair value of the planned asset exceeds the present value of the defined benefit obligation. Pledge receivable, a donor pledge to make future contribution to an NPO. Point of sale, POS system, a system where customer make a payment for good or services. Posting, the process of transferring information from the journal to the general ledger. Predetermined overhead rate. Determined overhead rate definition, the rate at which fixed production overhead costs are allocated to inventory. This rate is calculated as the total overhead cost divided by the normal value of the cost driver. Predictive value, information that help financial statement user predict future outcome. Preferred shares that have dividend priority over common share and also have priority claim on asset in the event of corporate liquidation. Preferred share, also known as preference shares. Premium may arise on obligation if the stated rate of interest of a financial liability is greater than the market rate of interest at the time of insurance of issuance. Prepaid expense, a cost that is paid for in cash and recorded as an asset before it is used or consumed. Present value, the discounted amount of future cash flow expected to be received from an asset or required to settle a liability. Present value, PV of the lease payment. The present value of lease payment discounted using the implicit rate in the lease or for lesser, or the incremental borrowing rate if the implicit rate is not known for lessees. Presentation currency, the currency in which an entity reports its financial results. Price earning, a ratio that measures the current market price of a share relative to earning per share. This provides an indication of how much an investor needs to invest in order to receive $1 of the company earnings. Principal agent relationship, a transaction that involves a third party providing goods or services to a customer. Prior period error that are not discovered in the accounting record until after the financial statements have been issued. Private corporation, a corporation whose shares are not traded on a stock exchange. Private enterprise, a profit-oriented entity that is not a publicly accountable enterprise. Pro forma financial statement, future-oriented financial report that are created using hypothetical scenarios, conditions, and or estimate from management. Probable event, an event that is more likely than not to occur, that is, the probability that the event will occur is greater than the probability that it will not. Processes, a series of steps taken to achieve a desired outcome. Production overhead, production costs composed of both variable and fixed cost. Profit margin, a ratio that measures overall profitability after all expense, including cost of goods sold, operating and financial expenses, and taxes. It is income or loss measured as a percentage of net sale. Profit or loss, determined by deducting expense from income in a period. Profit is also known as net income, and loss is also known as net loss. Profitability ratios that provide an indication of the efficiency of the company at generating income from its available resources. Promissory note, a written promise to pay a specified amount on demand or at a defined time, also called a note receivable by the lender. Property, plant, and equipment, tangible assets with future benefit of longer than 1 year and held to produce goods and services or rental to others. Proportional method, a method of adjusting for revaluation where both the cost and accumulated depreciation are adjusted proportionally to achieve an overall carrying amount equal to fair market value. Proprietary assumption. Under this assumption, a business result are considered from the owner perspective. If all assets are used to pay any debt or liability, the residual belong to the owner or owners of the business. Proprietor, an owner of a sole proprietorship. Proprietorship, a business owned by one person. Prospecting phase, the first stage in the process of searching for and extracting mineral resources. It is the initial search for the presence of mineral resources and involves preliminary and experimental work. Prospective application, when the effect of the accounting change are limited to the current and future statement only, and past statement are not adjusted. Provision, a liability of uncertain timing or amount. Prudence, to exercise caution in situation of uncertainty. Public accounting firm, organization providing accounting, tax, and consulting services to client. Public corporation, a corporation whose shares are traded on a stock exchange. Public sector, government, government component, government organization, and partnership, each of which is referred to as a public sector entity. Public Sector Accounting Board, PSAB, issued standard and guidance on public sector accounting. PSA, matters called public sector accounting standards. PSAS, the standard presented in PSAS are designed to generally meet the needs of its public sector financial statement. Public accounting enterprise, an entity other than a not-for-profit organization that has issued or is in the process of issuing debt or equity instruments that are or will be outstanding and traded in the public market and or old asset in a fiduciary capacity for a board group of outsiders as one of its primary businesses. Publicly traded bond, debt securities issued by a company, usually a public traded corporation, and sold to an investor. Publicly traded shares of a corporation that are traded on a stock exchange. Purchase discount, a reduction in selling price based on sale return and allowances given to a customer, often due to early payment. Purchase price, the amount paid by the vendor. Purchase option, an option purchased by an entity that entitles it to buy or sell shares in another entity. Put option, an option that gives the holder the right to sell an underlying instrument, such as a common share, at a predetermined price during a specific time period. Qualifying asset, an asset that takes substantial period of time to get ready for its intended use or sale. Qualifying hedging instrument, an item that is used to reduce or eliminate exposure from the risk of the variable on the hedge item. Qualitative characteristic of financial information, attributes that make financial information useful and relevant to users, and that is accurate and trustworthy. Quick ratio, a liquidity measure that refines the current ratio by comparing only the most liquid asset, cash, account receivable, note receivable, and so on, with current liability. The quick ratio is also known as the acid test ratio. Realizable value, the amount that would be received by selling an asset. Ratio analysis, a technique used to scrutinize the financial result of a company. Ratio are constructed between financial statement metrics that are related to each other in the business model. Raw material or consumable, material supplies to be used in production or in rendering services. Realized profit or loss, the amount of profit or loss realized in the period. Rebate, a reduction in price paid to the customer after the customer has already paid for the goods. Reciprocal non-monetary transaction, an exchange of non-monetary asset. Recognition, the process of recording item in the financial statements. Recoverable amount, referred to the higher of an asset or cash generating unit, fair value less cost of disposal and its value in use. That is, it is the amount expected to be recovered through an asset used or its sale. Redeemable bond, a bond where the issuing entity can buy the bond back at a stated dollar amount prior to the bond maturing. A redeemable bond is also known as a callable bond. Redeemable or retractable, a feature that allows preferred share to be either redeemed by the corporation or retracted by the shareholder for a specific price. Refundable fee, a fee that can be refunded. It is typically only refundable up until a performance obligation has been satisfied, at which time the seller is fully entitled to return the fee. Related party exists when one party is able to significantly influence control the decision of another party. This control may be direct, such as through shared management, or indirect, such as ownership through another company. Related party transaction, RPTs, exchange that occur between parties that are related and therefore may occur with conditions that differ from exchanges between parties that are not related. Relevance, information is considered to be relevant if it is capable of making a difference in the decision made by the user. Reliability, financial statements are consistent with the underlying transaction and event capable of independent verification and reasonably free of error and biases. Remeasurement gains and losses. The adjustment reflecting the difference between the actual fair value of the planned asset and the value previously forecasted. Rent and royalty payable, an obligation that is created by a contractual agreement in which amount owing are dependent on an amount of revenue earned from the use of another entity intellectual property. Repairs and maintenance, the day-to-day cost of maintaining an asset. Replacement cost, the amount that would be needed currently to acquire an equivalent asset. Reporting period, the length of time covered by a set of financial statements. Reportable segment, an operating segment or aggregated operating segment requiring separate disclosure of in financial statements determined based on whether it meets one of the three quantitative thresholds. Representational faithfulness, the accounting information appropriately reflect the substance of the economic event that occurred. Research, original and planned investigation undertaken with the prospect of gaining new scientific or technical knowledge and understanding. Residual approach. Under this method of estimating the standalone selling price of a good or service, the seller referenced the total transaction price less the sum of the known standalone selling price of other goods or services promised in the contract. Residual value, the estimated net realizable value of an asset at the end of its useful life. Residual value guarantee, a guarantee made by the lessee or an independent third party to the lessor that the value of the asset at the end of the lease term will be at least the specified amount. Restricted cash, cash that cannot be used for general purposes. Restricted contribution subject to externally imposed stipulation that specify the purpose for which the contributed asset is to be used. Restricted fund. This fund or funds include all items that are subject to restriction in use. Restricted fund method, a specialized use of fund accounting where revenue is recognized in the period of the contribution is received or receivable, provided a fund is separately reported on the financial statement that pertain to the governing restriction of the contribution. Retail information, a method for estimating the cost of ending inventory that uses the relationship between the cost of inventory and retail selling the price to establish a cost value for ending inventory. Retained earnings, the corporation cumulative profit, net or losses that have not been disturbed by way of dividend to the owner's shareholders. A retractable bond, a bond that includes the ability for the investor to force the issuer to redeem the bond at the stated dollar amount before maturity. Retractable preferred shares where the holder has the right to force the entity to redeem the shares. Retrospective application where past financial statements that are affected by accounting changes are adjusted. Return on asset, a ratio that measures the profit earned for each dollar invested in total asset. Return on equity, a ratio that measures the profit earned for each dollar invested in equity. Revaluation or goodwill, method of the withdrawal of a partner. A method of withdrawing partner from a partnership where the assets of the partner are revalued and they are written up or down based on their fair value, with a gain or loss that is allocated to all the partnership capital account, including the partner who is withdrawing after the revaluation. Goodwill is recorded used the price paid to the retiring partner to imply a value of the asset of the partnership or based on the independent evaluation of the business. Revaluation model, assets are recorded at fair market value and are still depreciated each year, with the depreciation being based on the reevaluated amount. Revenues increased in economic resources. We either by way of inflows or enhancement of asset or reductions of liability resulting from an organization's ordinary activities. Revenue, ASPE, inflow of cash receivable or other consideration arising in the course of the ordinary activities of an enterprise, normally from the sale of goods, the rendering of services, and the use by others of enterprise resources, yielding interest, royalties, and dividend. Revenue, IFRS, income arising in the course of an entity ordinary activities. Reversing entry, an entry made at the beginning of the accounting period that is the opposite of an adjusting accrual entry made at the prior period end. Right of offset, a right that exists by the bank to deduct cash from the deposit account to make a payment on amount owing to the bank. Right of use, ROU, asset, an asset that the lessee has the right to use for the lease term. Risk assessment process, identification, analysis, and management of risk relevant to the preparation of the financial statement to ensure that those financial statements present fairly and are in compliance with the relevant accounting framework. Royalties, payment made by one company, the licensee, to another company, the licensor, in exchange for the right to use intellectual property or physical asset owned by the licensor. Sale and leaseback transaction occurs when an entity sells an asset and immediately acquires the right to use the asset by leasing the asset from the purchaser. Sales, the main source of revenue in a merchandising business. Sales discount, a reduction in selling price based on sales, less sales return and allowances given by a seller, often due to an early payment. Sales invoice, document sent to a customer that includes a list of the item purchased and price paid. Sales return and allowances, the return of merchandise from a customer to a seller recorded as a sale return and allowances by the seller. Sales type lease, ASPE, normally arises when a manufacturer or dealer uses leasing to effect a sale of his product. Such lease transaction give rise to two types of income: the initial profit or loss of the sale of the product at the inception of the lease, and finance income over the lease term. Salvage value, the estimated scrap value of an asset at the end of its life. Scarce resource, a resource that is limited in supply or availability relative to its demand or its usefulness. Segregation of duty, the separation of key duty that so that one employee cannot commit fraud and then cover it up so that it is undetected. Self-sustaining operation, the functional currency of the foreign operation is different from the reporting entity. The foreign entity operates largely independently and dependently of the parent. And the intention is that the parent treat the operation as an investment. Separate business entity concept. A business must have its own record of revenue, expense, asset, and liability that is separate from that of its owner. Separate vehicle, a separate identifiable financial structure. This is usually a separate legal entity. Service businesses, businesses that provide service to customers. Settlement transpires when the pension trust pay a lump sum to the recipient rather than pension payments on an ongoing basis. Settlement date, the date on which monetary asset or liability resulting from a transaction is settled, the date on which cash is received or paid. Shareholders, the owners of a corporation who have the right to participate in profit through dividend and increases in the value of shares. Transferable unit that represent ownership of a corporation Settlement date. This date on which monetary asset or liability resulting from a transaction is settled, the date on which cash is received or paid. Shareholders. The owners of a corporation who have the right to participate in profit through dividends and increases in the value of shares. Transferable units that represent ownership of a corporation shares can be common or preferred shares. Or preferred. Share appreciation right. Allow employees to profit when the price of shares improves. An employee redeemed them and no cash is required. They may be cash or equity settled shares. Share option. Provide an employee the right to purchase share in a company at a pre-established price for a specific period of time. Share-based payment. When an entity offers form of equity as compensation or offer cash or other asset of the entity for amount that are based on the price or value of or values of equity instrument of the entity. Short-term employee benefits that are expected to be paid within 12 months after their year end. Example includes vacation time, profit sharing, and bonuses. Short-term lease, a lease that at the commencement date has a lease term of 12 months or less, providing that the leasee does not contain a purchase option. Single step income statement, an income statement that represents total revenue and total revenue. An income statement that presents total revenues and total revenues. Total expenses are deducted from total revenue to calculate net income. Significant influence occurs when an investor can participate in and influence financial and operating policy decision of an investee but does not have control. Software, technology that tells the hardware how to function through gathering, organizing, and manipulating input data. Software as a service, SaaS, subscription licenses that allow organizations to use a variety of computer applications hosted at the vendor site and shared with other organizations. Solvency ratios that provide an indication of a company ability to meet long-term obligations. Specific identification, a cost allocation method that assigns qualifying costs to individual items of inventory. Speculation, purchasing or selling an asset with the hope of profiting from an exchange in the asset value. From a change in the asset value. Spot exchange rate, the exchange rate at the date of transaction. Spot rate, the exchange rate for immediate purchase or delivery of the underlying asset, such as the current foreign exchange rate or commodity rate. Spreadsheet program, a program that allows for input data, organization of the data, and basic analysis and calculation. Many businesses make use of spreadsheet program for holding source data, tracking business information, or preparing basic calculation. Stable monetary unit assumption. Under this assumption, the financial statement must be produced in a single currency or monetary unit which is stable and dependable. Stale date checks that have been issued too far in the past, usually 6 months, that the bank will not accept for cashing. Statement of cash flow, a statement that presents a reconciliation of cash at the end of the beginning of the period with cash at the end of the period. Statement of change in equity, a statement that presents a reconciliation of the component of the equity from the beginning of the period to the end of the period. Statement of financial position, a statement that presents asset, liability, and equity accounts at a specific date, also known as the balance sheet. Statement of profit or loss and other comprehensive income, a statement that reports a company performance over a period of time, also known as the income statement or statement of comprehensive income. Statement of retained earnings, a statement that present a reconciliation of retained earnings from the beginning of the period to the end of the period. Under IFRS, it is the statement of change in equity. Stock dividend, a distribution of additional shares to the existing shareholders in direct proportion to their pre-existing ownership. Stock split. Like a stock dividend, it distributes additional share to the existing shareholder in direct proportion to their pre-existing ownership. Straight line method. a method of depreciation that assumes that the benefit derived from the asset occurs evenly throughout the asset useful life. Straight line method bonds. Any bond discount or premium is amortized evenly over the remaining coupon payments. Strategic investment. An investment where the investor influence invest direct the strategic and operational decision making of the management team of the investee company. Only common share investment can be strategic. Subsequent event. Those events favorable and unfavorable that occur between the end of the reporting period and the completion date of the financial statement. Used in ASPE. The interval of time between period and when the financial statement subsequent event period. The interval of time between period and when the financial statement are authorized for issue. Subsidiary, a separate legal entity controlled by another entity. Subsidiary ledger, a ledger that contains detail of the specific of a particular general ledger balance, for example, account receivable, also called subledger. Subsidy, a benefit given to an individual's business or institution, usually by the government in the interest of the public good to remove a burden. Substantively enact. Tax rates are considered substantively enact when the relevant bill receives total assent. Substantive change in ownership occurs when a transaction results in unrelated party having acquired or giving up at least 20% of the total equity ownership interest. Successful effort method, a method of capitalizing exploration and evaluating expenditure where only costs that lead directly to the discovery, acquisition, and development of identified mineral reserves can be capitalized. All other costs are expensed. T account, a graphical representation of a single account which is shaped like the letter T. Tangible asset, a long-lived resource that has a physical substance and it is used in operation of the business and it is not intended for sale to customer. Tax loss carryback, non-capital. Non-capital loss applied to taxable income of a preceding year up to 3 years prior, where the refund will be received of prior year's tax paid. Tax loss carry forward, non-capital. Non-capital loss applied to taxable income available to offset future expected taxable income. Taxable income, the portion of an organization income that is subject to tax. Taxable temporary difference, a difference that results in higher income tax to be paid in the future when the difference reverses or is eliminated. Taxes payable consist of mandatory balances owing to various levels of government as set out in legislation. Taxes payable method, only current income taxes are recorded, deferred taxes are ignored. Technical feasibility, the mineral project can be physically constructed and operated in a technically sound manner to produce sellable mineral product. Temporary method, ASPE, a method of translation that translates asset liability and revenue, and expenses in a manner that retain their basis of measurement in terms of the Canadian dollar. That is, it uses the Canadian dollar as the unit of measure. Temporary accounts that contain accounting information that relates to only one accounting period, including all income, expenses, and the drawing/dividend accounts. Temporary differences, revenue and expenses and other items of income are recognized in accounting income in a different period from when they are recognized in the taxable income. Temporary income summary account that represent the profit or loss of the partnership is closed out each year to the partner's capital account based on their share. Term deposit, a cash investment held at a financial institution that is invested at an agreed rate of interest over a fixed amount of time or term. Termination penalty payment required by lessee to a lessor as a result of early termination of a lease. These penalties can include the remaining payment on the lease and early termination fee, and so on. Third party award, customer loyalty program where a third party supplies the award. Time period assumption. Under this assumption, reporting performance in smaller periods such as yearly, monthly, or quarterly will provide sufficient information about the performance of a business to support decision making. Timeliness. Financial information is reported soon enough for it to be useful to the financial decision making. Timing difference. A difference that occurs due to transaction recorded by the company and the bank in a different period. Trade discount. The amount by which the vendor reduces the normal sales price when he sells to a wholesaler or retail store rather than the end user. Transaction, an accounting event that must be recorded. Transaction price, the amount of consideration that a seller expects to be entitled to in exchange for the promised good or services to a customer, including the amount collected on behalf of third parties. Transportation in, the amount paid to the freight company that transported the good from the place of sale to the company premises. This is also known as freighting. Treasure, treasury bill, T-bill, a short-term government obligation that is payable to the bearer and sold on a discount basis. Treasury share, share of an entity that the entity has issued and subsequently reacquired, also known as treasury stock. Treasury stock method, a method used to determine the incremental impact for stock option and warrant. He assumes the proceeds of a company received from exercised option are used to repurchase company shares at the average market price of the share. The increase in common share used in the calculation of its difference between the shares that are issued and those that can be repurchased at of an average market value. Trend analysis compares critical aspect of the entity performance on a year-over-year basis with other entities in the same industry. Trial balance, a list of account on and their balances at a specific time. On amortized fair market fair value differential. Fair value differential at acquisition less accumulated amortization, impairment losses, or disposal recognized to date on FV differential. Understandability. Financial information is only useful to user if they can understand it. Unguaranteed residual value. The portion of the residual value of the asset that is not guaranteed by the lessee or an independent third party. This amount represents the fair value of the asset when returned to the lessor at the end of the lease period. Unit of production method, a method of depreciation that assumes that matches the cost of the machine with the benefit that is derived from the machine by allocating the cost in proportion to the fraction of production capacity used. Unlimited liability. A business owner is personally responsible for all debt of the business without any limit on the amount they may be required to pay. Unqualified audit opinion. An opinion provided by an external auditor that financial statement present fairly in a material respect the financial performance and position of the organization in accordance with generally acceptable accounting principle. Unrealized profit or loss. The original amount of profit or loss reported in the legal entity statement at the time of intercompany sale occurs. At the time the intercompany sale occurs, less profit or loss realized to date. Unrestricted contribution. Contribution that can be used for any purpose. Upfront fee, a fee paid before a good is produced or service performed. Upstream sales, sales by the associate or subsidiary of to the investor or parent. Useful life, the period of time that the asset produce economic benefit for the business users, organization, or individuals who use financial statement and other financial information to make informed decisions. Users can be internal or external. Value in use: the present value of the cash flow or other economic benefits that a business expect to get from the use of an asset and its disposal. Variable consideration: a transaction price or part of a transaction price that is variable. Variable lease payment: lease payment that vary depending on some future factor circumstance such as an index or a rate, for example, the inflation rate, or future event. For example, a retailer may pay its landlord a rent based on the percentage of his sales each month. Variable production overhead cost: overhead costs that vary with the volume of production. Vendor rebate: a type of vendor allowance or incentive in which part of the purchase price is returned to the seller by the seller to the buyer when a specified quantity of value or of goods has been purchased within a specified time period. Verifiability: different knowledgeable and independent observers could review a transaction and could agree that the reported result is appropriate. Vertical analysis measures the balance sheet line item as a percentage of total asset or total liability and equity. It can also be performed on the income statement with sales as a base. Vesting date: this is the date on which the option or share appreciation right may first be exercised. Vesting period: this is the period of time between when the option or share appreciation right SAR is first granted and when each may first be exercised. If an employee leaves the employer before the end of the vesting period, the option SAR granted to that employee are forfeited. Virtual private network, VPN, allows a computer to connect to the internet to act as if they were connected directly to the corporate network or server. Volume discount: an adjustment to the price of goods or services based on the quantity of goods or services purchased. Warrant: contract that entitle the holder to buy or sell the underlying stock of the issuing entity at a fixed price until the warrant expiry date. Warranty: a promise from an entity or to a customer to replace or repair a good or service. Weighted average: a cost allocation method where the weighted average cost per unit is applicable to the unit in ending inventory and cost of goods sold. Weighted average common share outstanding, WACSO: the number of common share weighted by the number of days or months outstanding during the period. Excludes treasury share issued but not outstanding. Stock split and stock dividend are assumed to occur at the beginning of the period. Withdrawal: transfer from a business to an owner with in the form of cash or other asset. Work in progress: asset in the process of production or for sale. Working capital: a measure of company's current asset less short-term obligation, that is the current liability. Working capital cycle: a measure of the amount of time taken by an organization to convert the net current asset and net current liability to cash. Written option: an option issued by the entity. Yield to maturity: the interest rate that reflect an entity total expense of a bond or total return of an investment over its term. For bond, the effective interest rate is the yield to maturity.